Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week, and once again, we have an absolutely jam-packed week of economic data coming out that is going to have major influence in all markets, and that includes the mortgage rate market. Here's a very quick rundown of what you should be looking for this week. On Tuesday, you have the manufacturing PMI number coming out, but more importantly, you have the JOLTS number. Remember, JOLTS is the Job Openings and Labor Turnover Survey. Remember, last month, this came in 1 million shy of the estimate. 1 million. This month, it's expected to come in even lower than that. That is a huge indicator in our economy when it comes to jobs that there are less openings available to people to look for. Wednesday, we get a double whammy. We have the ADP Non-Farm Payroll report, again, jobs related, and it's going to show how many jobs have been added or recaptured back in the labor force. Coupled with that, we have the big Fed rate decision, their announcement, and they have their press conference. Now, coming into this meeting, everyone is expecting them to raise their interest rate by 75 basis points, so 0.75%. That'll effectively take us from 3.25% to a 4% Fed funds rate, and there is no one saying that it's going to be less at this point. A couple weeks ago, there were some people championing an entire 100 basis point move, but I'm not sure we're going to see that. With some of the data we got last week, I think 75 is right where they're going to be this Wednesday. So what we're really looking for is the comments they make at the press conference. We're looking for what forward guidance they might be giving and any verbiage that will give us cues as to whether or not they think they're going to continue the pace of these increases, which I think they will, versus starting to take their foot off the pedal a little sooner than maybe they expected to. Remember, they're trying to fight inflation with everything that they've got, and for the last couple of months, all the signs are pointing to they're losing. So I think this is going to be the press conference where we look back in history and go, yep, that was the one where they knew or didn't know that they were making the right choices in this window of time. Thursday, you have the services PMI coming out, which is the complement to Tuesday's manufacturing PMI. Then on Friday, you have the average hourly earnings, then you have the non-farm employment change, and the unemployment rate, all coming out on that same day. As you might expect, this one is a doozy because it is all labor and it is all a reflection of how the labor market is either growing in health or struggling. So you can see that this is an absolutely jam-packed week of data from all sorts of angles that are going to make their way through every single market. Really, this is the most data-intensive week we've had since last month. Yeah, I know. It's a lot of turbulent information that is going to drive markets one direction or another, yet again. So when we talk about this in relation to mortgage rates, here's what I'll be looking for. Number one, this is two sides of the same coin. On one side, maybe the market already has all of this priced in. Maybe they don't know how the data is going to report out, but they are already pricing in that it's going to be negative, and that's going to be reflected in the rates we see today. The other argument is maybe they don't have it priced in, and you're going to see wild changes in the mortgage rates if this data that comes out this week is worse than they expected, and it was not priced in. You're going to see wild and very swift volatile moves in mortgage rates. Number two, this could be the most volatile week for mortgage rates between now and the end of the year. Yes, there's going to be other Fed meetings. Yes, there's going to be other economic information coming out. But really, this meeting in November is the one that has been pegged for months now as the barometer for whether we're actually going in the right direction or not, and then what we're going to have to do as a result of knowing that. And number three, for those of you who are still sitting on the fence and you're not sure what you should do or how you should do or what solutions in the marketplace there might even be for your situation, just hang tight. If you have not yet taken action on a refinance for a cash out, or to build an ADU, or to do your home equity line of credit, let some of this information get into the marketplace, let the dust settle, and then we can situate what might be best for you looking forward. So for those of you who have time to let that happen and kind of see where things lie, you can also get yourself best prepared by organizing your personal financial house in preparation for the conversation you need or want to have. The last thing we want for you is to be caught flat-footed. And as we've been saying, fortune favors the prepared. I know that is a lot coming at you this week. We're going to be watching it every single day that new information is coming out. So if you're not connected with us on social media or on YouTube, please subscribe to the channel, like this video, turn on notifications so that every time we drop a new video, you hear about it first. As always, please share this video with a friend, family member, coworker, people you know, love, and trust. Let them know that we're here to help them win in mortgage and real estate in 2022 and now looking forward into 2023. Do not be afraid to cross the line yourself and ask us any questions you'd like to have answered, particular to your specific housing situation and how we can best help you. Thanks again for watching. Have a great week, and we'll see you again next week.